Hello and welcome to the More Cheese, Less Whiskers podcast. My name is Dean Jackson, and today we're having a really great discussion about real estate and about the psychology of what's going on in the minds of people who have a problem and need to sell a house, specifically investors or people who own investment properties. And we're talking with Brad Lazarus from the UK. He's in London, and Brad was one of the people who were at the very first Breakthrough Blueprint event I did in London just over 5 years ago now. So nice to reconnect with him and to see what's going on. But you'll notice in this conversation, we started out going into a very specific target audience and crafting maybe a solution specifically for them. But then when we took a minute to back up and look at the sort of meta picture of all of it on a macro level to see what's actually going on and where the transaction is taking place and what Brad's role in that transaction is, we came upon, I think, a really elegant and much broader opportunity for what he's doing. So sometimes, looking at taking a level up from the sort of micro focus on what you're narrowed in on as the problem that you're trying to solve can often create an even bigger opportunity and create an opportunity for even more people. So I think you'll really enjoy this episode. It seemed to go by really fast. So enjoy, and I will talk to you on the other side.
Brad Lazarus.
Dean, how are you?
I am fantastic. How are you?
Yeah, I'm really good, thank you. Good to talk to you.
It's good to talk to you. It's nice to see your name come up on the list here.
Good, I'm pleased. Yeah, I saw you last time at in a bar in London. Do you remember?
That's right, as I do.
Yes, you do.
Bar in London, as I do.
I didn't want to judge. Yeah.
That's so funny. So,
yeah.
I'm excited to chat. I mean, we go way back. You were at the very first Breakthrough Blueprint I did in London in
That's correct.
Rainy November of 2012, I guess.
Yeah, with
absolutely.
Like that. I think it was with Gavin, who subsequently went to every single one after that, who I speak to weekly.
Right.
Yeah.
That's right.
Good
well, just saying, you're absolutely, you're welcome back. We come back all the time in June, so
yes,
put it on your calendar.
Yes, it is in there. Yeah, no, Gav always reminds me of it as well. So, yeah, I'll look forward to it for sure.
Awesome. So tell me, catch me up, because there's been a lot of changes in stuff you're working on. So tell me everything you got going on and what kind of evil schemes we can hatch today.
Absolutely, for sure. So the business that I really want to talk about today is it's in your kind of the realms of real estate. Obviously, in the UK, we kind of refer to it as property, but essentially we are a property sourcing business. So we source. The bottom line is we source property deals and we package them up and we sell them to investors for a fee.
Nice. Okay, so we would call that here wholesalers.
Exactly that.
What you. Yep.
Yeah. So that can be anything from the types of deals that we're looking for. We could get them through estate agents, but we tend to like to go direct to the vendors, to the homeowners, or we'll go directly through to landlords. But each deal, there's generally a property problem that is involved in the deal. It's the reason that the seller might want to sell for below the market value. The landlord might have an issue with the fact that he's always going into tenant arrears. He can't maintain the property for whatever reason. There's always a problem around it. So what we do is we have like a toolbox, if you like, of property solutions, creative property solutions, and we'll talk to that vendor, that landlord, and we'll look to see what the problem is, and then try to apply a solution that gives both parties a win-win.
Okay.
So what I really wanted to see if we could try and focus on today was in the UK at the moment there's been a lot of kind of upheaval in the buy-to-let market. So essentially investors buying property to let to tenants for long-term kind of cash flow investments, essentially. So what we see happening, so there's a lot more regulation around it now. So what we see happening over the next few years, the belt is essentially going to be tightened on landlords. And the bottom line is a lot of them are going to have to pay a lot more tax, and they don't quite realize that at the moment. So what we're looking to do is essentially look to see if we can target them as an audience and then look to help them with one of our creative solutions, essentially.
Okay.
So yeah, that's the bottom line. Yeah.
So so that's the big picture here. Let's take it to a specific situation then. So let's take right from the top here. Who is our in Profit Activator 1 our specific target audience, and what is it that we're going to do for that person?
Well, I would say that the audience really is, well, the audience could be a landlord, but it could also be a homeowner. I think I really want to focus on the landlord, as I see that's where the opportunity is for us. So this is a landlord. Let's give him a kind of a rough, let's say, call it avatar, right? So he might be a dentist or a doctor, for example. And over the years, he's been buying maybe 3, 4, 5 properties. For his retirement, for his pension, to top up his pension income. Now, all of a sudden, the government have decided that they want to tax him on the full rental income that he's achieving on that property, rather than the rental income after interest costs of his loan. So he's then going to now find himself, let's say he's the dentist, he's going to find himself in a scenario where he's earning, I don't know, let's say he's showing £85,000 a year income. But all of a sudden, and he was getting maybe $10,000 a year from his property. So he was showing $90,000 on his tax return. Now, instead of showing $10,000 from his property income, he's going to be showing maybe $25,000 or $20,000. So he's going to potentially go up into a higher rate tax bracket.
Yes.
And that's going to happen with a lot of kind of amateur, or let's call them semi-pro landlords or property investors.
Okay. And so when is that a new development? Is that something that is coming or is now already enacted, or when does it take effect?
Well, it was in the budget maybe 18 months, 2 years ago, but it's a tapering up effect, which is really going to start in April, i.e. next month, and then slowly the mortgage interest relief will slowly kind of erode away, if you like, up until 2020. When
over 3 years it's phased in. Okay. And what is going to be the solution to that? What kind of, so everybody who bought a rental property, well, I guess it's any rental property, right? If they bought it prior to, when did you say it starts? April of this year? April 2017?
Yeah, around about, in the next month or so, yeah.
Okay.
I mean, I should also say as well that it's not entirely, that might not necessarily entirely be the reason why they have a problem. I mean, the normal kind of landlord stuff also applies, right? So
yes, I got it.
They're having tenant issues,
But that's something that they may be wondering, or they may not know about it. But let's say that's so everybody who bought a property before. An investment property before April 2017 is going to be in that situation. Nobody is grandfathered in. It's all, it's just the way it's happening, right?
Yeah.
Okay. And so that is going to affect 100% of the landlords right now who have a mortgage on their property.
Yeah, I would say, yes, essentially, yes, if they've bought them in their own names. If they've bought them private, if they've bought them inside a company structure, then these rules don't necessarily apply. The normal kind of taxation rates of a company would apply, so 20% corporation tax, essentially.
Okay, perfect. Okay, so is that, I'm hearing, part of the solution here, right? Is that part of the solution?
Exactly. Yes.
If you're okay.
Yeah. Yeah.
So
I mean, a lot of investors are looking at their portfolio and they're restructuring to put the portfolio into a limited company structure. But obviously they're then subject to capital gains tax, exposure, and all those other elements. It's not just as easy, obviously, just throwing it into a company. So,
sure.
But I think our market, now going back to the audience here, I think the portfolio landlord who's got 15 properties is probably quite savvy, and he knows this is coming. He's been working on restructuring his portfolio into a limited company or working it out.
Well, it's very unlikely somebody's going to own 15 properties in their own name anyway, if they're at that level, right?
Possibly, yes, yeah. Although, that could be the case, yeah.
Okay. And so where were you going with that then? Problem might be the...
Well, no, I was just thinking it's just going back to this idea of who the audience is, and I think it's like, let's call it, it's the amateur landlord. It's the landlord that kind of bought again, going back to this idea, I've always got this idea of the dentist in my head, that it's the dentist who bought 3, 4, 5 properties over the last 15 years because the thinking was that this was how you top up your pension. This is how you provide for your retirement and the legacy. They're not the ones
making all the right moves.
Exactly, making all the right moves, doing all the right things, thinking they're doing all the right things, but they're not. They don't. A lot of them don't have their ear on the ground to the latest, kind of property regulations. And so, for a lot of them, the first time that they're going to hear about this is when they have a meeting with their accountant to talk about getting the books together for the end of the year.
Yes, right.
So that's the distinction, I think, between let's call it the amateur landlord, if you like, and the professional landlord.
Okay. And then what are the availability of lists and being able to identify these people? Are you able to get a list of people, of landlords who own properties, in their own name?
The short answer is no, which is very frustrating, as you can imagine.
Yeah, the privacy is different, right? Yeah.
Exactly. Yeah. So, but there is one list that you can get, which is an HMO list of landlords. So HMOs are houses of multiple occupancy. So you have to have it's where you turn a 3-bedroom house into like a 5 or 6 single let. So you turn a single let into a house of multiple occupancy where it's 6 lets, let's say. So 6 rooms are rented out individually as opposed to the house previously. So you need a license to do that.
Okay.
So that's where those lists are. But those lists tend to be quite hammered by property sources and investors looking for deals because it is the only list that exists.
Right. And so what would, so if you've got those people, what's the catalyst here that's going to create the momentum for somebody to recognize they have a problem or to have something that they want to solve or a result that they want to get?
The catalyst. Well, I suppose in terms of the kind of the tax changes, that may be the headlines in the news, imminent implement. The changes are imminently coming. The conversation with the accountant, maybe. The other catalysts are around this idea of the general issues associated with being a landlord and maintaining properties yourself.
Yeah. We've just done like a lot of those things. Whenever there's a change or a government type of regulation or something that can be involved, one of the things that we've often done is do a public notice type of announcement, like say, public notice if you owned or if you own investment property prior to April 2017, read this, like this kind of like calling out to that person,
Yeah.
We've done that same thing with a lot of different scenarios, where you're calling out to that person and then sounding that every time there's a change, it's kind of a catalyst. We've done a lot of that with Social Security, for instance, here, where, if you're saying if you or your spouse plan on collecting Social Security after April 2017, read this. Like it's really calling out to the people saying, essentially, things are changing, and people want to know how's that going to affect me. So you get a chance for people to raise their hand, and you almost create like the guide or the handbook to the new rule changes, and how to benefit from them, Like if you were saying, here's what's going to change, and here's some of the solutions, almost packaging it up as a consumer awareness guide in a way.
Yeah. I mean, we played around with the idea of when we were trying to, generate leads from sellers. We created a website called the Property Advice Service, which we kind of had a .org domain to it, and put some useful kind of blog content. It's like a citizens advice bureau for property, that type of thing. So this is almost a kind of in line with that to a certain extent, isn't it?
Except definitely with a direct response approach to it.
Yeah,
that they would leave their contact information to download or to get this guide. And it's so effective if you can. We've been doing a lot of this with postcards. And so I think even with that list, if you say the HMO list, and you're saying that they get hammered by people, what would be the kinds of things that they would get from that? If they were to get something in the mail, who's hammering them? Like you said, yeah.
It's it's other investors, essentially other property sources. But the messages tend to be very kind of simple and to the point. And I think
we'll buy your house.
Exactly. We'll buy your house, or we'll guarantee your rent. Because one of the strategies is that the investor will guarantee the landlord's rent, and they'll offer. They'll look to add value to the property by doing a light refurb on it to increase the market rentable value of it, and then take the margin on it. So there's those. I mean, I think what tends to happen in the messages that tend to go out in property investor circles in the UK, what I've noticed essentially as a marketer is everybody's just targeting the acute pain.
Yes.
So they're all just going straight. The marketing piece, the message on the marketing piece is really just kind of targeting the jugular from first go. So that's where I see the opportunity is in. I mean, you always talk about the idea of a bundle of 100 leads, right?
Yeah.
And the idea of taking 50% will never be interested.
Right.
And then you see, I've been listening to you over the years, Dean. 50% will never be interested. And then 1%, no, maybe 10% will want to take action now. Right. And then your opportunity is in the educating and motivating the other 40% that remain, right? Right. And I think what happens in property in this country in terms of looking for property deals is that investors really only are targeting the 10%. Their message is there just to attract the 10%. And I think for me, the opportunity is in that 40%.
I agree. That's exactly right. So that's where things like a guide to this, or how this, explaining how this works, educating, starting with the facts, and that's one of the things, like with the Social Security thing. We offer the Social Security benefits guide, and those kinds of things. Now you get people who have raised their hand, and you can start a conversation with them. So I think if you look at that with the HMO, that means that minimally they have at least one property with 6 units, right? Is that what?
Roughly. Generally speaking, yeah.
And with this list, are you getting? Do you see that they own more than one property, or?
Yeah. You can see multiple property license holders.
Okay, there you go. Yeah. So you've got that thing, and you'd also be able to see which ones are individuals versus LLCs, right?
Generally not. I mean, you can make an assumption. Okay. I mean, you could make an assumption based on the address, because if the address if the address is the name of a company and an office address,
right,
you could make an assumption of some sort, possibly.
Mm-hmm. Mm-hmm. We're just trying to stack the deck, that's the way. So I think that there's that opportunity to use that sort of, if you invested in a multifamily property, before April 2017, read this and go on and talk about that, the changes that are happening, and they can get the free guide. That would be one approach to engaging in a dialogue with those people, Mm-hmm. But I want to push the pause button for a second and get to the rudimentary thing, because we kind of got into a very specific, scenario of why somebody would be there. But let's go out macro now a little bit and see, where do you make money and what's the actual transactional thing? Because we picked one very specific flavor of how that happens, but essentially, what's the core of what it is that you benefit from?
You mean in terms of the solution and the solution that we can offer them, and how it and how
your business, so you're essentially where do you make money? And let's look at where, that, as opposed to looking for this one micro thing of how that actually happens, right?
Okay.
The fundamental thing is, anybody who wants to sell their property quickly, it doesn't have to be an existing landlord. It doesn't, right? You're just looking for people who want to get rid of their property.
A property owner. Yeah.
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 Regardless of whether they're a landlord, right?
Exactly. Yeah, exactly. Yeah. So, essentially, we make money either when we keep the property for ourselves and keep it in an internal portfolio, but more often we will package the deal up and then offer the deal to another investor who, if they want that deal, they'll pay us a commission to take the deal. So it's essentially like an off-the-shelf property deal for them. That's what. So we're generating the lead. We're doing the analysis on whether the deal is the deal. If it's not one creative strategy that we can apply to solve the problem, we'll look to the toolbox and find another one. Whichever one works to give a win-win for a potential investor or the property owner, we'll go with that one and package that up and pass that to the investor, who will then pay us a fee for it.
Okay. So there's something, it's an interesting thing that it doesn't, you're packaging the, when you say keeping it yourself, do you have a fund? Do you hold properties yourself as part of a group, or when you were saying that keeping them yourselves, what are you speaking about?
Well, yes. I mean, occasionally we'll keep a few. Like, for example, depends how much cash is required, or whether we need to borrow in order to kind of control the property, if you like, whether that's buying it or controlling it. So there may be an opportunity whereby we can just control the property for a certain period of time, guarantee a certain level of market rent for a landlord, as I mentioned before, add value to the property, and then put it back onto the rental market, and the uplift is our profit. That's one way of being able to kind of keep it for ourselves. The other is we can look to finance partners. So we can look to do like a flip deal, essentially, whereby, we'll get our team of builders onto it. But in the meantime, we've had to buy that property with, joint venture private finance and maybe some bridging finance, some short-term loan finance, for example. And then we can, do the work on the property, flip the property, sell it, take the profit, pay the bridging loan back, pay the private finance back with interest. And that's how we might be able to, that's how we're also able to kind of keep the deals for ourselves. So, either way, the same solution. So you could package up a flip deal and pass that to an investor as well.
So that's kind of an interesting thing. I just was talking with somebody about a company here in the United States that's just kind of getting some traction called Open Door. And what have you heard about them, or do you know?
No, go on, yeah.
Okay, so Open Door, what is fascinating about that is that, I've been going to Peter Diamandis. He has a mastermind called Abundance 360, and this year was the 5th year of him doing 25 years of these events where we meet in January, and it's kind of like a showcase of what's coming in the future. He's like on top of all of this. Do you know who he is? He wrote Abundance and Bold and started the X Prize. Okay, it's just for people who might be listening and not know who he is. That one of the things that he always talks about, and we spend a lot of time kind of looking at the impact of things like robotics and artificial intelligence and machine learning and 3D printing and autonomous cars and all the things that are shaping the near term future, things that are inevitably coming. And I always look at things like that through a real estate lens, because that's been my background for so long. I came as a real estate agent and serving and working with real estate agents, helping them to make more money. So I'm always curious about how this digital revolution is really going to affect the real estate world, And so I came away from the first of those with this comfort in thinking that the real estate industry, the reason that it hasn't been more disrupted by digitization is because at its core, it's a emotional thing. You can't digitize the last 100 feet of a real estate transaction. It's always going to be a negotiation between at least two completely irrational people negotiating the market value of the only property like this one in the world right now. That's really what it is. There's no commoditizing real estate. Every single property is different. Every single owner's situation is different. The conditions of the property, all that stuff. And so I left feeling pretty comfortable that, if a real estate agent was to focus on the listing side of the transaction of the business, that would be a pretty safe haven for them, right? There's always going to need to usher people through those stormy waters and help calm those seas. Now, this year, I heard about this company, Open Door, which is a venture-funded, tech-based, AI-enabled real estate company that will buy your property. So they're operating right now in 3 markets in Phoenix, Las Vegas, and Dallas here in the States. And essentially, if you have a house and you want to sell it, you can fill out a form on their website and they'll make you an offer in 24 hours. They'll say, here's what we'll pay for your house. And you can close in 3 days, or you can close in whatever amount, whatever you want to close, if you need to match up a closing date or something. And I thought, what really struck me about that is that they've taken the irrationality out of one half of the equation, right? Because they're a rational buyer. They've got money and they've got algorithms that show what this house is worth. So they've got a sort of logical framework to what they'll pay for a property, and they'll come in and do an inspection, say this needs to be done, this, and then the seller will either do the repairs or pay the money for the repairs, and they'll charge. They charge a 6% fee for the experience, they call it, and then somewhere between a 1% and a 6% risk fee based on how the condition of the property, the location, all sort of algorithmic factors that kind of indicate that you might have to hold on to this property for a certain period of time. So they have to build in a risk factor for that. And then it struck me that they've removed the irrationality from one half, but then I thought, but they still have to now they have to find a real buyer still, but they've removed the irrationality out of the selling side of it now when they're a seller, that they've got the property, it's completely staged, fixed up, repaired to be at the optimal state of repair, like what because that's kind of where your business is in assessing that gap, right? Like you look at a property that's in trouble, or a situation, or it needs repairs, or it needs updating, and you look at the current market, and you know that if they did this, and this, that it would be worth this much and command this much in rent, which means that would increase the value of the property to meet certain cap requirements, so that people can get a return on their investment, and you're kind of playing in that arbitrage, right? You're playing in that gap.
And I think fundamentally the difference between maybe an estate agent or what you'd call a realtor is that gap's probably smaller than a property sourcer, because the investor wants value in the deal.
Yeah.
He wants value in that property that he's acquiring.
Yes.
Whereas a homeowner doesn't. The value is in living in it, right?
Yep.
So I'm trying to work out, though, here, this open door. So I actually went on their website. This open door is. What, are they digitizing they're digitizing the listing side of it? You're saying, and then they're putting in some kind of both sides.
Yeah, they're basically saying to you, they're saying, based on an algorithm, that this, and they're only buying properties in a specific band, right? Like they only buy single family properties built after 1980, 3 and 4 bedroom detached, single family homes.
So that's what the algorithm can cope with, almost, right?
Yes, it can say that with certainty, with very little, because it sort of commoditizes it in a way, right? That you can say this is the thing there. Now, where it ends up becoming really interesting is then when they're the seller, they basically put in, they're not over improving a property. They're bringing it up to kind of like the optimal state of repair, not making it perfect, not making it, where there's still work to be done. They're doing the things that have the most weight, the things that make the biggest difference, and they're selling at the optimal price. But now the properties are open from 6 a.m. till 9 p.m. and a buyer can go and look at the property whenever they want with a code that they'll send them, that while they're at the door, that you can use this code to open the door and go in, and they can look around the property, do whatever they want to do. And then if they want to buy it, they can make an offer. So they're removing the realtor and all the pomp and circumstance from it, in a way, right? The journey of it. They're not gonna come to your house and do the whole listing presentation to compliment you on your house and walk through and have tea with you and get to know your emotional needs for the move and all that kind of thing. It's like, this is what your house is worth and this is what we'll pay. And if you want that, we're happy to do it in 3 days or whenever. And if you're not, then that's okay too. Good luck. Right? They're not concerned. They're not trying to convince people to sell to them.
Yeah.
Right. Whereas, so they've taken that emotional need out of it. And that's kind of a brilliant thing where you're combining intelligence and capital, that when you look at it, that, you're in a situation where if you had unlimited capital, you wouldn't have to go through a lot of these mechanisms that are the dance and things that you do, because you would be able to get the result right better and faster than you would have to convince somebody to put up the money to get the result, right? I mean, I'm maybe putting words in your mouth there, but is that? I'm seeing the difference. You see, I think that because the model which you've outlined there, I think is the motivation to sell so everybody that we deal with in terms of on the listing side, let's call it,
the owner,
the seller side,
the seller side has to be motivated in some way other than just because they fancy selling and wanting to move.
Right.
And I think this is the example here, this open door example, is a great way of targeting, it's really appealing to people that fancy moving because they want to move, because it's time to upsize. Not because they have to, because there's a pain of some description there. Am I right in thinking that with this?
Well, I think but it would be great that I think it upgrades to that. It's also a blessed relief for somebody that has to.
Right. Okay.
Yeah. You see what I'm saying? Is like
absolutely.
It's an easy thing. It's an option that's available to them, that they know that within 24 hours and 3 days, I could be rid of this problem.
I could be rid of it, but I think everybody knows, do they not, that there's a payoff for the speed. The payoff is the fact that you're going to have to lower the price of your home, right?
That's exactly right, and that's the thing. So they take it that you're going to take off that 6%, and that which would be what a normal real estate transaction would cost. And then, in addition to that, pay, somewhere between a 1% and a 6% additional discount on that property for the urgency of it, or the
right. So there's almost So the value, if you like, in my model. If you steal some of this model, if you like, and put that into our model, the value's in that 6 to 12% almost.
Right. That's exactly right.
Right.
That's what is happening there, because that's the thing. If you look at what somebody could do, is they're going to, traditionally, if they want to sell their house, they would either have to find a buyer themselves at the full retail value of what the house is worth. That would be the very best scenario for somebody, right? If they had somebody who was willing to pay full market value for their property and they didn't have to use a real estate agent to find that person, they're going to net the most money from that property. Since most people don't have that, they choose that they're going to have to go, select a real estate agent to help them and go through that, knowing that they're going to have to pay that real estate agent 6% of the sale when they find a buyer, right? And they'll expose it to the whole real estate community, which is set up to find these buyers. But it may take a long period of time for that to happen, right? May take, because they may interview 3 or 4 real estate agents and then decide to go with the real estate agent that gives them the highest estimation of what they think it could sell for, which often they would tell them that price just so that they can get the listing, right?
Yes.
But so they end up with the property on the market for a long time, then they have to reduce the price, and then time's going by and they're continuing to make their mortgage payments for 3, 4, 5 more months as the property's sitting there on the market. All that adds up. And when you take the equation and say, I could bypass all of that, still pay the 6% that I would normally pay to the real estate agent, and I can bypass all that other risk for an additional 4%, say. So I'm getting 10% less than 10% off of what the retail value of the property is, and I get it in 3 days without thinking about it. That's what we're talking about. There's a company here in the U.S. called CarMax, and they do the same kind of thing for cars. And I had a Mercedes SL 500 that I had, because I run into a situation where I had a 911, a Porsche 911, I had my BMW X5, I had my SL 500, and I'm sitting here with 3 cars, and I don't, I want to get rid of one of them. And rather than go through the process of trying to find a buyer for my SL 500, retail value at the time for it would have been, say, $35,000 if I had found a buyer, a private buyer. Trade-in value would be $27,000, let's say. If I were to trade it in on something, like just take it and drop it off at the dealer. And then CarMax, I went in there, and their offer was $32,000, right? So it was more than a trade-in, but less than what I could have gotten if I had sold it myself. But I got the money instantly, and I was happy to pay. I was happy to pay 10% a premium for that, right? Because it was just a hassle. There's no amount of time, even just the time to place an ad or to go through that hassle was worth more than $3,000 to me.
See, I'm trying to kind of figure a way of taking that type of a model, or specifically the real estate model we just talked about, and essentially what I can see happening with this open door path, if you like, is the seller is motivated to the point where they don't want to deal with a realtor. And they're willing to reduce, but they've been educated and motivated towards that point, right? At that stage, they know what their options are.
Who does? The people who go with the open
seller.
Door? You mean?
Yes, exactly. Yeah, because it's quite a new model for them, isn't it? And I think that's what that's what I think our model shares with this, is the fact that actually there's it's not immediately apparent what the solution is.
Right, exactly. So I think that when you bookend the thing, right, like the ultimate scenario, if we take it for a seller, is that they have a retail buyer who's ready to buy right now. That would be the best case scenario. And on the seller side of you finding those people, your ideal is you find somebody who's got a problem so big that they're willing to take a discount on their property.
Yeah, they're willing to
get rid of the problem.
The payoff in some way. Yeah.
So that is on a spectrum, right? Like if you look at the somewhere on the poles there, somebody's either they've got a buyer who's ready to buy it right now, which means they have no need for you, right? Or they're on the other end of the spectrum at their wit's end and they would do anything if they could get rid of that property tonight, right?
Yeah.
Now, somewhere between those two poles is where every person who's thinking about selling their house or going to sell their house in the next 12 months is.
Yes.
Right.
So my interpretation of that is that if you've split that spectrum in two, on the left you've got retail, on the right you've got hands thrown in the air at the wit's end, just wants to get rid of it for 40% below the market value, for example.
Yes.
We're in the middle, verging towards the right. Whereas the realtor is obviously in the middle, verging towards the left.
Yes. Now, here's what is very interesting, right? Like where if you think outside of the box of this and think that if you now extend those poles and let's just put a circle around that and call that the set of everybody who's going to sell their house in the next 12 months, that they fall into that set of people, right? There's going to be some number of people in London And are you doing this primarily in the city or all over the UK?
Well, it's all over the UK. Yeah, all over the UK.
So of all of the people who are going to sell their house in the next 12 months in the UK, they all fit somewhere in that circle and on that pole, right?
Yeah.
Okay. Now, when you look at the opportunity here, look for the common things. What they all sort of really want to know is, how much is my house worth, right? That would be a question that they would all be interested in if they had a way of, they're gathering their research, they're kind of gathering their thoughts around this. And if I start to think, like, one of the ways that the magic formulas that I've discovered for the realtors is that offering the report on Winter Haven lakefront house prices is something that somebody would want as evidence, right? As research, as facts, when they're gathering all of their information, that it's a data point that would be useful for them in the negotiation with whoever is going to be buying their house, right? If you had that, if you own a lakefront house and you had access to the March 2017 report on Winter Haven lakefront house prices, that's going to give you knowledge that would be helpful no matter who you sell your house to, right? Whether you're looking for, you have a beautiful home, no problems, but you're looking for a retail buyer, or you're living in this lakefront house and you're in trouble and you have a problem, or you own that lakefront house and you've been renting it as an investor and you are in trouble and you want to sell it, you're equally going to be interested in knowing how much the house would sell for, for what the prices of those are. So my out of the box thought for you would be, what if you did that as a lead generation type of thing, right? Do a direct mail to specific type of properties and offered the March 2017 report on whatever the types of properties are. And then when people respond, to sort of evaluate and cherry pick the ones that have a problem that would be that you would be a solution for. And if that's not the solution, to then sell those leads to a traditional estate agent.
Right, exactly. Yeah, no, that's I suppose what I think we've kind of got to the point here where you need to monetize. Is there a way of monetizing all the leads? If you can't find the ones with the pain, because if you put a message out there appealing to the pain, you're really going into the world of convincing, right?
Exactly, yes.
So if you pull back from that and actually you provide the informational resource as you've described, that means you're going to get a lot more leads. And our stumbling block initially was, well, we don't want those leads. We only want the ones with the pain. But actually, if you can shift the business model slightly, you can offer, yes, you can refer them on to a realtor and estate agent, but you can also then potentially offer the property on the open market for them.
Right.
And that still keeps you in a dialogue. If it doesn't sell after 6 months, you're in a situation where, okay, well, let's look. Do you really need to sell now? After 6 months. Well, let's look at this other solution for you other than just selling it on the open market.
Right. Yeah, that could be too. Right. Absolutely.
Okay. So
once to think now about that, now you think about when you go to the edges, when you go to the whole, the universe of it kind of thing, rather than just myopically focused on, we're only looking for this specific person, we ran into that same situation where we had a lot of realtors that were just looking for people who wanted to do short sales, Yeah. And do you know what a short sale? Do you call it that over here, where you're selling it for less than what you owe and negotiating with the bank? That was happening in 2008, 2009, 2010, when all the properties were going down. And so the thing was that the very best way to find those people was to offer the report on whatever the house prices were, because they're going to raise their hand themselves. Now you're in that conversation with them.
Okay, so just thinking back to this digitizing the sale front, the open door scenario here, what they ended up doing was actually they chose a single target market of based around the type of property.
Mm-hmm.
Right. So
they chose a market. They chose, Phoenix, and this type of home, single family.
This type of like a 3-bedroom home with 2 bathrooms, and that's exactly
the commodity. Yep.
Right.
Mm-hmm.
So in order to kind of narrow the focus a little bit, we would almost be looking to do the same thing in terms of maybe the house price guide wouldn't be for the whole of Leeds, which is a city. It would be for a specific type of home, because those are the homes where we see the deals.
Yes, that's exactly right. So that was going to be my next question to you, is to see what would be the things, right? So if it's multifamily, like if you're focused on things that are multi-unit properties, that, and I say that differently than the way what you were describing them.
HMOs,
HMOs, and maybe not differently, but in that same kind of way, is that
that's a specific type of property. Yeah, I mean, you could lump
what's the general public call what we would call multifamily homes? What would you call that is it apartments? Is it
what do you mean by multifamily homes? I'm getting the idea that we've got 4 families living in one home. No, that's not it.
Right. Multifamily meaning one dwelling with 4 flats.
Oh, I see. Like a small block type of.
A block. Is that what you call it? There you go.
Yeah, we'd call that a block of flats. Yeah.
Okay.
So you'd have like 4 2-bedroom apartments in one building.
Yes. Right. Yeah. That's what I'm talking about. A block. Okay.
Yeah.
Is that what you'd call an apartment block? Or a flat block? Or
a block of flats.
Block of flats. Okay. It's all funny, though. It's like you guys speak a whole different language.
I know. It's become very apparent in this conversation. Yeah.
You got a different word for everything.
Yeah.
So, if you were to take, say, the owners of those, that if you were to, mail to the owners of
like a block,
of blocks, and offer the March 2017 report on Leeds block, however you would word it, block prices.
Price guide for blocks of flats of blocks of flats of 2 bedrooms, for example. Yeah.
Mm-hmm.
Okay. And you obviously,
anybody who has one as an investment or is thinking about selling one would definitely be interested in knowing what the prices are,
Okay. So if we were so again we don't it's hard we can only target the landlords through that license list of HMOs. The other way of being able to, it's for example, Facebook ads is relatively easy to target landlords.
Mm-hmm.
Easy-ish, I should say. It's it depends how interactive, obviously, they are in terms of their interest targeting and what have you.
Sure.
But obviously, we're then we're calling out with this guide, let's say, on 3-bedroom terraced houses. the price guide the price guide on the Leeds price guide, March 2017 Leeds price guide on 3-bedroom terraced houses for landlords.
Yes.
As investment properties, for example.
Right.
It's that. Yeah. That's how we could kind of call out to them, right?
Exactly. That's what I'm talking about. Mm-hmm.
Okay. So let's say that we have a bunch of landlords now. They've, and in terms of, we've now narrowed down. So if we're looking at this spectrum we talked about,
yes,
we're kind of moving, because we know there's a problem with landlords on the horizon over the next few years.
Yeah,
we know that we're moving towards the wit's end side of the scale, right?
Yeah.
In terms of who we've attracted because we've gone for landlords in terms of our market. So I suppose the next step there is how do we what are we sending weekly? That's always been my issue in a way. I suppose I originally started out by curating some landlord investing focused blog posts and emailing weekly, for example.
Well, I mean, essentially, but then it's just you've one of the greatest blessings for a situation like this for your Profit Activator 3 is market data. You've got market data that's constantly changing, right? Each month there's new adjustments to that. This is what's sold. This is what's available. And so it could literally be a combination of curating those an article or 2 articles, and here's what's happened in the market this week, and that's as simple as it needs to be. I mean, it doesn't need to be much more than that. I've been amazed by, I've been working with a gentleman in Toronto that has an app for real estate searching, and it's one of the most popular ones in Canada. But we started sending out a flagship email to all the people who've downloaded the app, and just every week an email goes out with just 2 articles here, a picture and a headline with a link to the article that are curated articles, and the super signature. Here's what to do now. And find out how much your house is worth. Click here. Join us for a daily tour. Click here, or get a free home loan report. I mean, that is as simple as it could be. So what you need to kind of figure out is what is the cookie that's going to be the thing that you can offer to somebody that gets them to raise their hand as somebody taking the next step, So it could be the evaluation to find out, pinpoint price analysis on what their house, what their flat or property could be worth. It could be a room by room review, or to show what to do, how to optimize what they could get for it.
So this is kind of, in a way, kind of coming down to your realtor model, the 8 Profit Activators, isn't it? Really, if we've got that ability to be able to
anything where you have the opportunity to be a market maker is really the thing, because on the other end of that, what I would really be encouraging you to do is to be looking at creating getting all the money in a row, right? Like I said to them, that the very best thing that could happen to them is that they have a retail buyer ready to buy their house right now. And since they don't have that, they have to go to a real estate agent, who most of the time, a real estate agent is going to say, when we list your property, here's what we're going to do to take it out to market and go find the buyer. What makes even more sense is if you can, while you're finding people who are looking for who own the properties that are thinking about selling, if you are at the same time finding people who want to buy those properties or lining up capital, lining up investors, lining up people who want to take over those properties, you can create the dream come true on each end.
Yeah, and that's and your phrase, the market maker, has always been in my head as we've developed out the model for this business, and we have that. We have investors that have qualified. We've qualified with proof of funds, and but now as I'm thinking that, I'm thinking, well, actually, now we go all the way back to profit activator number 2, choosing the single target market and back to the specific region so we're essentially sourcing properties to order.
Yes.
Right. Okay. But going broader.
Yeah.
Okay.
Rather than just specifically looking for the problems that you're anticipating because of we're trying to milk more gravity out of this graduated tax change than is maybe the real pain. That's probably not the real pain that's gonna move somebody into action.
Yeah, it's the trigger that causes, right?
Yeah, I think so. It's part of the chain reaction, but there's certainly going to be other issues more than just the tax situation of it,
Yeah. Okay. So this idea in the education and motivating element, this idea of highlighting the pain is almost unnecessary. So, this idea of are you suffering with maintenance issues? You're getting a call at 3 a.m. from a tenant who's locked out.
Yeah.
It's almost irrelevant, really, isn't it? Because if it's going to happen, it's going to happen. They don't need to be reminded of it.
Right. That's exactly right.
So that'll trigger it anyway. Actually, what we need to do is
focus on the cheese, right? What would be the cheese that they really want? The cheese is they want the money. They just want to get rid of it.
Or they want the solution to it.
Yeah.
Okay. Good. Thank you, Dean.
All very exciting.
It's good. It's good because I feel as though we've got a thought process and a system for narrowing down the audience to,
and also a potential way to make a profit generating your own leads.
Of course, and that's always. But that's what I was saying before. That's always been the stumbling block. Is this idea that if we go broad, we're going to have 15% of our leads are going to be good leads, and the other 85% we've just spent on lead generation. We can't monetize them. But then the thinking was, well, let's monetize them. Let's find a way of monetizing them. And find a way of helping them, because some of them will end up, going further towards the motivated end of the spectrum. Eventually.
That's great.
Good stuff. Thank you very much. And thoroughly enjoying these podcasts, I have to say, and it's been a real honor to be part of this one, I have to say. Thank you.
Awesome. Thanks. I enjoy them myself. It's always fun to hatch evil schemes.
Absolutely, yeah. And I hope to see you in June.
Yes, absolutely. I'll be there.
All right.
Okay, bye.
Thanks, Dean. All the best. Bye.
And there we have it. Another great episode. And I really enjoyed those kind of, big conversations. We covered a lot of ground in that. I mean, looking at the digitization and how that's changing everything and seeing, fundamentally where you could maybe take the irrationality out of whatever the transaction is that you're doing in your business. And I think that Brad's got a really great opportunity here. I'm looking forward to catching up with him again in London in June. That's if you're in the UK or in Europe and you'd like to get together with us at the end of June, I'm doing a Breakthrough Blueprint event right by London Tower Bridge. This will be the 6th Breakthrough Blueprint I've done in London, and we got a really great community over there, and we'd love to have you join us. We'll spend 3 days, small group, 10 to 12 people, focused 100% on hatching evil schemes for your business and doing just like what we do on the More Cheese, Less Whiskers podcast, but over 3 days. So if you'd like to join us, just send me an email, dean@deanjackson.com. Put London in the subject line, and I'll get you all the details. Look forward to connecting with you.